Morning, everybody. This is Patrick MontesDeOca with the live trading room, sponsored by the Equity Management Academy for December 19th, 2014. What I would like to do here for this segment is review the gold and silver swings trading signals that were produced last Saturday and see what kind of results we obtained this past week. On this screen, if you take a look at the website for Equity Management Academy, there is a column on the left called Updates. If you click on Updates, it will take you to the latest report that we just published this morning. And if you click on my name, Patrick MontesDeOca, it will give you all the reports that were published last week. And we're going to take a look primarily at what happened last week. But what I wanted to just quickly review, and you can take the time, if you go to my website, emod2trade.com, read these articles a little more closer and clearly, so to speak, when you read the full article here. So there was a lot of activity in the crude oil market. The crude oil market collapse in here has pretty much collapsed the 8th largest economy in the world, and the Russian ruble collapsed 17% in one day. So there is certainly quite a few dislocations taking place in the energy markets here that is going to make a little more volatility, you might say, as we move in towards the end of the year. But you can read these articles on your own time, and hopefully you can appreciate these fundamentals. But if we go to the report that was published last week for the gold and silver market here, published on December the 12th, the gold market closed last Friday, not this past Friday, but 2 Fridays ago on December 12th at 12:22, and it told us that the market was slightly bullish, but if it was to close below 11.99, that this bullish trend would be negated. The pivot point for the week, or the metrics for the week to identify the uptrend or downtrend, was 12.16. And coming down through 12.16, it confirmed basically that the bullish signal was neutralized for the week and looked to cover shorts on corrections coming down to the 11.93 to 11.64 levels, and basically to reverse long from these levels with a stop at 11.64. And if you went long here, that you can take profits as high as 12.45 to 12.68. The resistance level of 12.16, or I should say support of 12.16, was broken. So let's take a look at the activity in the gold market last week and see how we were able to apply these algorithms for trading last week. The market under 12, which is right here, is the close of December the 12th, and it basically told us that if we came down below 12.16, which is the metrics for the week, that we can come down to as low as 11.93, 11.64. And so the market on the 17th, on Wednesday, made a low of 1182. 1182 was the low. And it came right into this pocket of support where the code recommended basically to cover these positions in this area, and recommended to reverse and go long. And so for all intents and purposes, the long signal was picked up at 1193, and your stop is 1164. And so the first target now, in order to figure that out, we got to take a look at the algorithms basically for next week, this coming week. So we're going to add the algorithms indicating the action for next week, and let's see what basically they're telling us in terms of any trading for next week. So let's go back to the report that we just published this morning. And see what we can anticipate for next week. The market on Friday, the February gold futures contract closed at 1195, and closing above the 1194.50, which is the moving average, the weekly moving average, is bullish. But a close below 1194.50 would negate this bullishness and turn the trend to neutral coming into next week. The algorithm weekly momentum indicator is telling us that with the market closing below the weekly price momentum indicator of 1201, it confirms that the price momentum is bearish coming into next week. But if we were to close above 1201, it would negate this bearishness. Because the signal is bearish, it's telling us that potentially it could come down to the 1176 to 1158 levels, and then it's recommending, if it comes down to these levels, to go long and put your stop at 1158. If you go long from these levels here, your first target would be the 1201 level, which is the pivot point for the week, or the metrics for the week. So basically, let's review this. And with the market closing below the VC code here that you see of 1201, it's slightly bearish unless it closes above 1201. And if it closes above 1201, then your targets are 1219 to 1244. The signal would be a close above 1201 would reverse this bearish short-term signal to neutral, and a close above 1201 would activate a buy signal, a long signal, with your first target at 1219 and your second target at 1244. If we come down, it's recommending to buy into the buy one zone of 1176 to 1158 and put your stop at 1158. So it's basically very close to the pivot point for the week, that it could go either way. And the action is very clear that if we do come down into the buy one or buy two levels, this area becomes the highest probability to buy the market. If you buy the market here, once again, your first target is the 1201. Closing above 1201, your targets above is the sell 1 level of 1219 to the sell 2 level of 1244. Let's take a look now at the silver market. And once again, review the same process and see what the silver market told us coming into last week. and see what actually happened here. The silver market on December the 12th closed at 1703. The market closing above the 9-day moving average of 1647 was telling us the trend was bullish, but if it was to close below 1647, that it would negate this bullish short-term signal to neutral, and that if it does close below there, that the market basically can come down to the pivot point for the week of 1685 through 1685 and closing below 1647 would negate the bullish signal basically that we had coming into last week, and look to cover your short positions at the 1635 to 1567 levels. So coming into last week, Monday, by Tuesday, the market made a low in silver of 1554. It picked up the buy signal of basically 1635 and 1567, and it closed at 1606. So it looks like the signal came down into the support levels that were anticipated last week, and it has rejected these low prices and essentially closed above the 16 handle at 1606, 1607 for the March silvers, for the March silver futures contract. Let's add basically the algorithms for next week and see what we can anticipate as we come into next week. The current report that we published earlier today basically is telling us that the silver futures markets closed at 1607, and with the market closing below the 9-day moving average, weekly is confirmation that the weekly trend momentum is bearish, but if a close above 1633 would negate this bearish signal to neutral. So you want to be looking at this market price closing above 1633, and you are going to begin to get the sentiment of the momentum at that point to be bullish. And so this is a good indicator to measure the momentum of the market. The weekly momentum indicator, the code, is telling us that with the market closing below the 1623 now, which is the pivot point for the week, or the metrics for the week, once again, that identifies the trend, the uptrend or downtrend, is telling us that the price is slightly bearish because it closed below that. But if we were to close above 1623, this bearishness would be negated. So we have the moving average at 1633. We have the VC weekly price momentum indicator at 1623. So it's given us an indication that these are major pivot points, that if the market penetrates above there and closes above there, that it would negate this bearishness that we came into next week. Now, if we do come down, obviously in below 1623, which we closed, it's telling us that there's a possibility that the market can come down to that 1538 to 1469, but that you want to be prepared to cover your short positions and go long at these levels. At the 1538 to 1469. And if you go long here, your first target obviously would be that 1623 pivot point, and closing above there. And in fact, if you do buy into these areas of 1538 to 1469, I think would be a highly high probability trade. The area between buy 1 and buy 2 is offering a tremendous value or a buying opportunity. The market down here is tremendously oversold, particularly if you factor in, the production costs of silver. We're looking at silver down maybe $7 or $8 below that cost. So the path of least resistance that we're looking at is to buy corrections in the silver market as we approach the buy 1 level of 1538 to 1469. If you get a chance to buy it there, lighten up and take some profits at 1623. But if we close about 1623, your upper target zones or resistance levels are the 1692 to 1777 for next week. To review this, you close below the weekly pivot point of 1623. It's slightly bearish, and it's suggesting that the market can come down possibly to that 1538 level to 1469. And if it does, it's recommending for you to buy long at this price levels of 1538 to 1469. The upper target zones, if we cross above the 1623, once again, is 1692 to 1777, where we would suggest for you to take some profits on your swing trades. What I would like to do next is basically take a look at an ETF that we are using to trade the silver market, as we feel that the silver market has the most upside profit potential in comparison to any of the metals. And so we want to focus very closely on Uslv, and let's basically see what the market was telling us last week as we published the future swing trading for ETFs on December 12th, 2014. The market closed at 2492 last week, and with the market closing above 2389, it was giving us a bullish indication coming into last week. But if we were to close below 2389, it told us that this bullishness was negated to neutral, and with the market can come down into that 2411, and closing below 2411, it would negate basically the bullish short-term position to neutral. And so we have an indication that the prices could come down if closing below these indicators to the lower algorithms that we looked at, where it told us to cover if we do come down into these levels at the 2248 to 2003 coming into last week. The market by Wednesday had made basically a low of 1861, which was substantially lower than the targets of 2248 to 2003, and basically it went long from these levels, and it's long on one position at 20 with a stop at 2003 as of last week, and the market closed at about 2059. And so what happened last week is that the market came right into this area of support, rejected lower prices, and bounced above to close at 2059. Let's review and see basically the algorithms, what they're telling us we can expect as we come into next week. The market basically closed above the VC code for the week of 2017, so it is bullish coming into next week. But if we were to close below 2017, it would negate this bullish short-term trend to neutral. And it suggests that it can come down to 1803 to as low as 1547 if it does come down. This would be an incredible buying opportunity to add to your long-term positions that we're suggesting basically for this particular ETF, that is the Credit Suisse Velocity 3 times long silver ETF that is based on Uslv, that basically follows the futures contracts volatility on a highly leveraged basis. So for those that are looking to trade this, please be aware that this is a very volatile ETF, that it can fluctuate substantially, and you need to be prepared basically and have a strong stomach to be able to trade these instruments. But the volatility is tremendous, particularly if you want to hold a position overnight in the silver market without the risk of margin. You can pay for the security at the market value and just sit with your position until targets are met. And Equity Management Academy feels very, very strongly that the metals markets are bottoming. They have bottomed basically the last couple of weeks. There are many indications for that to be. And so we're suggesting for traders, investors, to take a look at Uslv and to basically begin to build a position that we feel could be extremely profitable over the short term. And so to review this, the close above 2017 is bullish. The first target is 1373 with the second target of 2877. And here you can see the algorithm telling you exactly the levels of where to sell. And if you have multiple positions, you can use these two levels for you to unload your positions. If the market comes down below 2017, be prepared to buy at 1803 to 1547. I do not recommend to go short as the path of least resistance here that we're looking at seems to be to the upside. I hope that this analysis has been able to be very helpful to you in identifying for you the highest probability trades coming into next week. And if you do have any questions in terms of the application of this algorithm for stocks, ETFs, futures markets, and the options markets, please don't hesitate to give me a call. Under no obligation, you can call me at 805 area code 418-1744. I want to take the time out to wish everybody a very, very joyful, peaceful holiday, and I look forward in seeing you next week. God bless, and Merry Christmas. Very happy holidays to you and your family.